In the past 24 hours, VinFast stock price has risen a staggering 20%. That makes it the third largest automaker in the world behind Tesla and Toyota. In fact, it's now worth twice as much as Ford, or as much basically as Ford and General Motors put together. Now, what is most striking about this is that the company has only delivered 137 vehicles this year in North America. And critics have blasted their electric vehicles as being subpar. However, there's something going on here. There is a reason for why this is happening and why actually no one is really benefiting from this scenario. In fact, it's all a bit of a joke when you actually look at the numbers. Hello, my friends. Welcome to the channel. It's great to see you. Thank you for tuning in. I'm Sam Evans. You're watching the Electric Viking. VinFast stock has risen to $89 within the last 24 hours. And its stock is proving to be incredibly volatile. If you're an investor and you haven't had a nervous breakdown, I would be absolutely shocked. On Monday, the automaker's shares were higher than ever, bringing its overall value to more than that of General Motors, Ford, Volkswagen, as in the Volkswagen Group, the conglomerate, or Mercedes-Benz. VinFast first started trading on the NASDAQ exchange on the 15th of August with an opening price of $22 per share. The price very, very quickly rocketed up to an incredible value of $38.78 before falling back down to $13.94 later in the same week. However, within only a few days, on August the 28th, the price rose to a staggering $89. That suggests that VinFast is now worth $200 billion, making it the third most valuable automaker on earth. That's in history as well, behind only Tesla and Toyota, and worth more than Goldman Sachs and Boeing. So what is going on? Well, there is a few little weird caveats to this bizarre valuation that kind of help explain the madness. Those companies that I just mentioned, their stock prices are relatively even. Yeah, Tesla is the most volatile of all of them, and even Tesla is nowhere near as volatile as VinFast. VinFast founder Pham Nhat Vuong still controls an incredible 99.7% of the company's shares. That means the general public can only purchase a staggering 0.3% of companies' shares, and only a very tiny minority, therefore, is available, making the volatility incredibly profound. Moreover, there are some serious questions about the automaker's ability to compete in big markets such as the US and Europe. VinFast has proven that it can actually manufacture large volumes of EVs, sort of, but it has only managed to sell 137 in North America this year. Now, the other big issue about this, and I've spoken on this topic a number of times, is what some of the car companies who have tested, or the automotive reviewers who have tested the cars have said. They've said that they were literally scared for their lives while driving these cars. The quality of the vehicles has been questioned by North American automotive critics. They've also struggled to make internal combustion engine vehicles for years before finding some success in Vietnam with EVs. But the thing is, in Vietnam, the brand has a very compelling name. VinFast, for example, owns hospitals, schools, universities, all kinds of different areas in the Vietnamese culture. They're the most known brand in the country. They own real estate across all different cities everywhere. Now, all of this has led some analysts to tell investors to sell their stock, reports Investor Place. In fact, right now would be the perfect time to sell if you are holding it. It would be pessimistic to suggest that the automaker is doomed to fail, say some experts, but sorry, I disagree. Its stock price has little to do with how realistic its chances of success actually are. That has led some experts to say that the performance of the shares is in a bubble that could burst at any moment. And I think that'd be a fair thing to say. In fact, guys, this is the probably the craziest story in modern history of a well-known company having a valuation that is so far outside the realms of reality that I've ever seen. I've seen nothing like this. If you can think of another example, I mean, sure, there's been penny stocks, mining stocks, penny stocks that have had similar kind of trajectories, sure, but not companies you've ever heard of. Not to the situation where they become the third largest mining company in the world based on their valuation, even though their production numbers are minuscule. It just doesn't add up at all. Now, for me, this evokes memories of the $400 billion crash. VinFast stock price will also inevitably drop, as one thing will happen very soon. Well, not very soon, but within a few months. Most of the shares in VinFast will come out of lockup in the next 6 months to a year. So there will be much more liquidity on the market, much more availability for VinFast stock. Of course, it's very likely to bring prices of the stock down to a much more reasonable level. But this is what VinFast had to say about the fact that the third most valuable automaker in the world, we think the markets recognize our competency. Now, I'm not really sure what they mean by that because I haven't seen a whole lot of competency myself. But anyhow, in 2022, VinFast sold 24,000 cars globally, a tiny fraction of the deliveries made by the Volkswagen Group, Ford, or GM, who made 8.3 million, 4.2 million, and around 6 million vehicles, respectively. The 6-year-old company startup is not yet profitable, in fact, far from it. It posted a loss of $1.4 billion over the past 9 months, and is still in the early days of scaling a multinational business. In fact, it broke ground on a factory it plans to build in North America within the last few months, but nothing has actually been built yet. That modest track record doesn't seem to be deterring stock traders. On Tuesday, VinFast was one of the top trending companies and the most watched stocks on StockTwits, a social network for investors. Now, what I find difficult to understand here is just what exactly you're buying when you buy VinFast, because the company does have strong backing from its parent group, the Vin Group, but it's not part of the Vin Group. So what exactly are you purchasing here? I mean, it seems to me just to be a brand, not actually an actual product, because the company hasn't actually really created anything. Now, when asked on how they plan to get to profitability, they said this: strong backing from our parent group will help us to get to break even and to profitability. But they didn't actually explain any details on how they plan to get there. Very vague comments here. I'm personally not into the vague. I'm more into actual specifics and data. VinFast has bold global ambitions though. In July, they broke ground on their new factory in North Carolina, which it hopes to use as a base for US sales. The company has suffered from a chilly reception there though, with a wave of recent poor reviews about its SUV, the VF8, and a lot of criticism as well on their pricing model. In fact, people have worked out that the whole rent to buy structure, it's sort of a scenario where when you buy a VinFast, you can choose to buy the car but not the battery pack. You then rent the battery pack, but it actually works out to be quite an expensive business model, almost like buying 2 cars instead of 1. As a result, they scrapped that idea. The firm has also teased a European launch, telling shareholders it will enter the region soon. On Tuesday, the company iterated their expansion plans, telling CNN it was eyeing additional launches in Asia and the Middle East. There is a lot ahead of us, they said. Asked why the company has decided to compete in the United States, where it squares up against large players such as Tesla, it said it was exactly for this reason. The US is a very difficult, very challenging market, she said. If we can make it there, we can pretty much build our brand and make it anywhere. Now, that may or may not be true. I'm not really convinced that VinFast could make it in China. A lot of automakers are going to be destroyed there within the next 5 years, and it's already happening today. But can VinFast compete in North America? To be honest, I have no idea. I mean, I do this every single day for a job. I read hundreds of articles. I look into companies. I look into their data. I look at their balance sheets. I personally have zero belief that this company has any chance of succeeding in North America. In fact, I think it's far more likely that a company like Lucid would succeed. They actually have a real product, a real factory, a real battery technology. It's not an amazing company in my opinion. They're great, making expensive sedans. I don't see that as a very profitable future, but it's still a lot more than what VinFast have. So Obviously, all of this is just utter madness. It's craziness, but it's fascinating to watch. It's like one big entertaining drama that's only going to end in tears. Thank you for watching.